Hi everyone. Welcome to our channel where we break down complex topics into easy-to-understand concepts. Today, we're diving into the world of health insurance providers and explaining 65 key terms that are essential for anyone looking to get their insurance license. Whether you're studying for your exam or just curious about how health insurance works, this video is for you. Let's get started. 1. Administration Services Only, ASO. Plan. An ASO plan is a contract where a self-funded employee benefit plan hires an insurer to handle administrative tasks, like claims processing. The employer remains responsible for paying the claims, while the insurer acts as a third-party administrator, TPA. Think of it as outsourcing the paperwork. 2. Adverse selection. Adverse selection happens when people who are more likely to need insurance, like those with higher health risks, are also more likely to buy it. This can lead to higher costs for insurers because they're covering more high-risk individuals. 3. Blue Cross. Blue Cross is part of the Blue Cross and Blue Shield network. It specifically covers hospital services like surgeries and inpatient care. 4. Blue Cross and Blue Shield. This is a well-known insurance provider that pays medical providers directly for treatment, rather than reimbursing the insured. It's a partnership between Blue Cross, hospital services, and Blue Shield, physician services. 5. Blue Shield. Blue Shield covers the costs of physician and medical provider treatments. It's the other half of the Blue Cross and Blue Shield partnership. 6. Capitation. Capitation is a payment method where healthcare providers are paid a fixed amount per patient, regardless of how many services the patient uses. HMOs often use this model. 7. Case management, utilization review. This is when an insurer reviews large claims to discuss alternative treatments with the insured. It's a way to manage costs while ensuring the patient gets the care they need. 8. Change of life, event. A change of life event is something like marriage, divorce, or having a baby. These events often prompt people to buy or change their insurance coverage. 9. Certificate of Insurance. This is the document that group plan participants receive to prove they're covered under a group plan. It's not a separate policy, it's tied to the master contract. 10. Closed Panel Network. A closed panel network is a type of HMO where providers work exclusively within HMO facilities. Patients must use these providers to get coverage. 11. COBRA. COBRA stands for the Consolidated Omnibus Budget Reconciliation Act. It's a law that allows employees to keep their group health insurance for a limited time after leaving a job. 12. COBRA Group. A COBRA group is any employer with 20 or more employees. These groups must comply with COBRA regulations. 13. COBRA Qualifying Event. A COBRA qualifying event is something like job loss, reduction in work hours, or divorce. These events allow individuals to continue their group health coverage under COBRA. 14. Co-insurance. Co-insurance is a cost-sharing method where the insured pays a percentage of their medical costs, and the insurer covers the rest up to a certain limit. 15. Community rating. Community rating is a way insurers set premiums for small groups. They base the rates on the average health costs of the entire community, not just the group. 16. Concurrent review. Concurrent review is when an insurer reviews a patient's treatment while they're still receiving care. This helps ensure the care is necessary and cost-effective. 17. Consolidated Omnibus Budget Reconciliation Act, COBRA. COBRA is a federal law that lets employees keep their group health insurance for a limited time after certain events, like job loss or divorce. 18. Contributory plan. A contributory plan is a group insurance plan where both the employer and employees share the cost of coverage. 19. Conversion privilege. Conversion privilege allows someone to switch from a group plan to an individual plan if they lose access to the group plan, like after leaving a job. 20. Copayment or copay. A copay is a fixed amount you pay for a medical service, like $20 for a doctor's visit. It's different from co-insurance, which is a percentage of the cost. 21. Creditable coverage. Creditable coverage is previous health insurance that counts toward reducing or eliminating waiting periods for pre-existing conditions when you switch plans. 22. Dental Maintenance Organization, DMO. A DMO is like an HMO but for dental care. You choose a primary dentist and they manage your care, including referrals to specialists. 23. Employee Welfare Benefit Plan. This is a plan funded by employers that provides benefits like health insurance but not pensions. It must comply with ERISA regulations. 24. Enrollment Card. An enrollment card is a form new employees fill out to join a group insurance plan during the open enrollment period. 25. Enrollment Period. The enrollment period is the time frame when employees can sign up for or make changes to their group insurance plan. It usually happens once a year. 26. Evidence of insurability. Evidence of insurability is proof that someone is a good risk for insurance. It's often required if you try to enroll outside the normal enrollment period. 27. Evidence of insurance. Evidence of insurance is another term for a certificate of insurance, which proves you're covered under a group plan. 28. Exclusive Provider Organization, EPO. An EPO is a mix of an HMO and a PPO. You can see any in-network provider without a referral, but out-of-network care isn't covered except in emergencies. 29. Experience Rating. Experience rating is a method insurers use to set premiums for large groups. They base the rates on the group's past claims history. 30. Extension of benefits. This allows you to keep receiving benefits for a specific condition even after your insurance coverage ends, for a set period or until the claim is resolved. 31. Franchise health plans. Wholesale plans. Franchise plans offer health insurance to members of an association or professional group. Members get individual policies, often at discounted rates. 32. Gatekeeper. A gatekeeper is another term for a primary care physician, PCP. They manage your care and refer you to specialists if needed. 33. Group health insurance. Group health insurance covers a group of people like employees of a company under one master contract. It's often cheaper than individual plans. 34. Group Model HMO, Closed Panel. In this HMO model, the HMO pays a group of providers a set fee, and the group pays the doctors for the services they provide. 35. Health Insurance Portability and Accountability Act, HIPAA. HIPAA is a federal law that protects your health insurance coverage when you change jobs and ensures the privacy of your health information. 36. Health Maintenance Organizations, HMOs. HMOs provide comprehensive health care for a fixed fee. They focus on preventive care and require you to use their network of providers. 37. Increased persistency. Increased persistency refers to the fact that group insurance plans stay in effect even as individual members come and go. 38. Indemnity plans, major medical insurance. Indemnity plans are traditional insurance plans that reimburse you for medical expenses. They don't have networks, so you can see any provider. 39. Independent Practice Association, IPA. HMOs, open panel. In this HMO model, doctors work in their own offices and see HMO patients part-time. It's more flexible than a closed-panel HMO. 40. Individual Practice Association. This is another term for an independent practice association, IPA. 41. Master Contract. The master contract is the group insurance policy issued to the employer or group sponsor. It covers all members of the group. 42. Master Policy Owner. The master policy owner is the employer or group sponsor who holds the master contract and is responsible for paying premiums. 43. Multiple Employer Trust, MET. And MET combines multiple employers into one group to provide insurance. The trust holds the master contract, not the individual employers. 44. Multiple Employer Welfare Arrangement, MEWA. MEWAs are groups of employers who join together to self-insure their employees. They're regulated by ERISA and exempt from some state laws. 45. Natural Group. A natural group is an organization that exists for a purpose other than getting insurance, like a company or union. 46. Network Model HMO, Closed Panel. This HMO model involves multiple groups of providers who work exclusively with the HMO. 47. Non-contributory plan. In a non-contributory plan, the employer pays the entire premium for the group insurance plan. 48. Notice of Privacy Practices. This is a document that explains how your health information is protected under HIPAA. You receive it when you enroll and every 3 years after. 49. Open Panel Network. In an open panel network, providers work in their own offices and see HMO patients part-time. 50. Persistency. Persistency refers to how long insurance policies stay in force without lapsing. 51. Point of Services POS Plan. A POS plan combines features of HMOs and PPOs. You can see in-network providers without a referral, but out-of-network care is partially covered. 52. Pre-admission certification. This is a review process to determine if a hospital stay or surgery is medically necessary before it happens. 53. Preferred Provider Organization, PPO. A PPO is a network of providers who agree to offer services at discounted rates. You can see out-of-network providers, but it costs more. 54. Pregnancy Discrimination Act of 1978. This law prohibits employers from discriminating against women based on pregnancy, childbirth, or related conditions. 55. Primary Care Physician, PCP. Your PCP is your main doctor who manages your care and refers you to specialists if needed. 56. Prospective Review. Prospective review is when an insurer evaluates the need for a treatment before it happens. 57. Qualifying Event, COBRA. A qualifying event is something like job loss or divorce that allows you to keep your group health insurance under COBRA. 58. Retrospective Review. Retrospective review is when an insurer evaluates the need for a treatment after it has already happened. 59. Service Basis. Service basis refers to insurance plans where you pay a premium in exchange for services from participating providers. 60. Service Providers. Service providers are doctors, hospitals, and other healthcare professionals who provide services to insured individuals. 61. Small Employer. A small employer is typically defined as a business with 50 or fewer employees, though this can vary by state. 62. Staff Model, Closed Panel, HMO. In this HMO model, doctors and hospitals are employees of the HMO and provide care exclusively to HMO members. 63. Taft-Hartley Trusts. These are trusts created through collective bargaining between unions and employers to provide benefits to employees. 64. Third-Party Administrators, TPAs. TPAs handle administrative tasks for group insurance plans, like claims processing, on behalf of employers. 65. Utilization Review. Utilization review is the process of evaluating the necessity and cost-effectiveness of medical treatments. And that's it. We've covered 65 key terms related to health insurance providers. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our future videos. Good luck with your insurance license journey, and I'll see you in the next video.